GM. So Bitcoin lost its 50-week EMA, the bull market support, the magic purple line which price was pinging off for years. Volatility to the downside is increasing. As traders, all we need is volatility to make money. So today, let's dive into all of the trading setups that I am looking at today and in the coming weeks. So first of all, losing the 50-week EMA. Typically, you want to then look towards your 100-week EMA. You can see last cycle, lose this 50-week EMA, we go to the 100-week EMA, which holds for a decent bounce. That might not look like a big move, but from bottom to top, this was a 46% move on Bitcoin here. Absolutely insane. Doesn't look like it when you just look at the candlesticks alone, but could we see something like that where, not necessarily saying the 100-week has to lead to new all-time highs, although it can. Everything's on the table. Everything has a probability as a trader. Barring that, could it just lead to a lower high bounce? So what does that tell me? In either scenario, I'm interested in bidding this 100-week EMA. And you guys will know if you've been watching my weekly outlook videos, my monthly outlook videos. You can check my playlist, guys. This has been a level I've been talking about forever now. So good thing about this 100-week EMA is it coincides with this previous block of demand here. And the reason Bitcoin's crashing so violently right now is because there's not been any demand here. This is all gaps, guys. This inefficiencies on the weekly. Closest demand is this zone over here, which it looks like we're potentially heading to. So that adds further confluence to this 100-week EMA. Because right now, what are we seeing? Well, if we look at the Bitcoin ETF flows, a big outflow day again, 372 million. So that's above the average of 260 million outflows per day, which is what it's been recently. They keep selling. And the same way they propped up this bull market, sent it from 40 to 126. When they take profit, it's also going to accelerate this market downwards, which is what we're seeing. Furthermore, we have jobs data tomorrow. It's been weeks since we've seen economic data due to the government shutdown. So traders are uncertain on what this data is going to look like. It's been the first time in history that we've had such a long gap between receiving any economic data. So what does that create? It creates uncertainty. And what do we know risk assets hate? Well, risk assets, they hate uncertainty. Why? Because even if you're not going to sell in advance to some jobs data that you're uncertain about, and we know we've got GDP next week, even if you're not selling, a lot of traders are at least going to make the decision to say, okay, you know what, I'm not buying. Maybe I'm not selling, but I'm not buying more. And just by that nature, that's a reduction in demand. And if demand goes down, supply and demand dynamics suggest that price will then fall. Simple. And Bitcoin's a very demand-driven asset since the supply we know is fixed. So that's the violent selling. That's who's selling. Now we just need to get that final capitulation. So what I've been talking about on yesterday's video is waiting for that big wick down with high volume, ideally with a bearish catalyst, because that then triggers the dumbest money sellers, your forced sellers, people who literally don't have a strategy and will panic sell off news. That's what bottoms the market. Guys, April the 7th to April the 9th. Check the dates. This is when reciprocal tariffs went into effect. To the exact day. Peak or bottom. This happens over and over again. And what did this coincide with? Well, look at this candle. So we had a big red candle, followed by this green candle, which had a big wick lower, high volume, so lots of capitulation around those tariff announcements, which were perceived as bearish news in big air quotes. Of course, that came right to the 50-week EMA as well, so more confluence, and gave all the hallmarks for a bottom. That's why we were buying that. That's why I told you I was buying that. You see this time and time again, Japanese yen carry trade, big volume day, peak or bottom. Of course, you got that bearish catalyst with that carry trade unwind. Price never went lower, and of course that was at the 50-week EMA too for added confluence. You got other examples like this Silicon Valley bank collapse. You have this big wick down, above average volume, which is a lot of volume back at that time. And I know other exchanges, the volume's even higher. Again, bearish catalyst, price wicks down, capitulates those weak hands. So that's what forms the bottoms. That's what you want to see. And could this coincide around the 100-week EMA like we see the 50-week? That's why I'm interested in that level, especially if you see a big volume tick down. That's 101 what you want to see to trigger some sort of short squeeze, because people are going to get cocky. People are eventually going to just think, yeah, we can endlessly sell, endlessly sell. And what often happens is price is going to look crap like this. And then it's just going to go up. And that squeeze, where will it end? Well, it will end at one of these clusters of distribution. Not sure where that is. Point of this squiggle is to show you eventually it will then just come back down to where people's stops are. Everyone's stops are going to be there for people FOMOing into this move. But initially, as I said, it's going to look bearish. But if you get those high volume candles like a big wick confluencing with something like the 100-week EMA and a bearish catalyst, that's your 101 signs for some sort of squeeze, even if it is a lower high bounce, as I said. So that's why longs are the play. I'm looking to bid this level on both my long-term portfolio and potentially a futures trade. As always, I'll keep you guys updated in the Discord exactly what I do with that. So that's the zone I'm looking at for swing longs. High risk to reward area. That's where I want to bid, especially if there's capitulation. So we'll be watching those signs carefully. So that's what I'm looking at in terms of Bitcoin with this 50-week EMA and 100-week EMA. Now, if we zoom in, what are we seeing? Well, Bitcoin, this H150 EMA, it is well respected. You can see once, twice, 3 times, and even 4th time on this New York Open today, held perfectly as resistance. That's been your downtrend respect. And I've been taking some shorts with you guys. All of you will know. We took this setup. I exited this one at break even because I saw some risk of a squeeze. Could have played out in the end, but what I then actually did was take a short on the right side of the V. So market's topped here instead of shorting on the left side where price is going up, because then you have to have a wide stop. Got out because I saw squeeze risk. I then waited, got my confirmation, started losing these levels, and we went down off the daily open, back tested the daily open over here, plus it was a value area low from high to low here. That was my trigger to look for shorts. And of course, we were at that all important 50-week EMA. It was right side of the V, so I could manage my stop at the interim high. And that played out overnight where I took profit when I woke up. So banger trade. That one's played out now. This 50 EMA is holding as the trend resistance. Didn't catch this one, but that right there goes to show that sellers are still in control today. And I think today you would expect one or two things. If we lose 90, which we are doing right now, potentially this is going to just keep cascading lower because sellers are in control. Trend is your friend and the trend is down. Simple. Now, barring that, if we can hold above 90, then what I would actually expect is today to be a bit of a nothing day. And maybe we fill in some of this gap and price goes nowhere because we got that big news tomorrow. So 90K is really that all important level that I'm looking at to see if this is going to be a nothing day or if it's just going to be seller continuation as we've been seeing. And well, we do have some key levels, some OPEX levels. So we know we've got the Deribit levels, 90, 85, and 80 over here. IBIT levels are much more interesting because the IBIT options expiry is on Friday at the end of the New York session. So 53 and 50, they're the big levels in terms of open interest. So look at this over here. We've got 50 and we've got 53. And we're currently in between both of them. So that's where price is likely to ping pong between. So right now, we lost 53. That means anyone with a put is in profit. Anyone with a call is in the red. So that can lead to reflexive selling to push it even lower so that those puts can stay in profit and put those calls in max pain. And that can lead to what likely could be this 50. And then once you're at the 50, that's when people are incentivized to hold this level if you've got a call there, and the puts are incentivized to break it. But often you'll at least see a bounce here and then maybe an attempt to break that tomorrow, perhaps off the economic data. So initial thoughts would be for price to actually just come to this 50, and that's probably where you see some sort of bounce. Maybe tomorrow that's when you get a break if we do have volatility, or maybe it does actually hold and we just ping pong between these levels. The closer you get to OPEX, the more it becomes relevant, of course, because it's got that time factor. And how does that coincide with the Bitcoin USD levels? So right now, as we're at 51 on IBIT, that is coinciding with 90k. So break 90k, looks like we're going to go to new lows and come to this 50, which will likely be somewhere around 87, 88. Break 50 and you're likely heading then to 85. So that's what I'd be looking at in terms of IBIT coming into options expiry. Of course, get back above 53, then that's going to actually coincide with something like the yearly open. So if we look at this, you've got the yearly open over here. And if I can actually get that Bybit chart back up. Nope, it is not the chart, of course. We have infinite charts on the Crypto Coach channel. There's never a fresh chart. Yearly open, let's go grab that quickly. So that level is over here, January the 1st. This is the 2025 candle, guys. Very interesting level because it shows how Bitcoin's performed for the year. So if we look at this right now, mark this out as yearly open. If we break above 53, that coincides with this price action over here. You can see this consolidation is this over here on the IBIT chart. So break above 53, then you put those puts back offside. They're going to have to cover. That can trigger a short squeeze. So above the yearly open is really the level to trigger some sort of big squeeze up. That's going to be definitive. Do we just continue rejecting from that level as we have done? Or can we actually get above there? And that's what's going to trigger your squeeze likely to some of these highs over here to take out short stops. So a lot of work to do to get there, especially with economic data tomorrow. I think it's unlikely, but that's your level to look at. So if it does happen, then potentially that's the market showing its hand that there is some bullish data coming, because you would expect uncertainty to lead to lower actually. And that level is going to be mostly decided by 90k, in my opinion, that big Deribit level. So while we're below 90k, there's risk of further cascade lower. In between 90 and the yearly open, expect chop until tomorrow, the jobs data release. Above the yearly open, expect a squeeze, as that is a news event failure. That uncertainty is actually diverging and being bullish, which can offer your best setups, as it shows positioning is overcrowded to the short side. So that's what I'd look at levels wise. That's how I'd treat this IBIT level. So above 53, short squeeze above yearly open is coming on the USD chart. Below 50, then you're likely setting some new lows here. But you'd expect 50 to hold, which is still going to be a new low, likely around 88. And that's when potentially 100-week EMA comes in, as mentioned over here. So that's what I'm looking at in terms of Bitcoin. Now, trades-wise, back to this chart. Is there anything interesting here? Well, potentially if we sweep this low over here with a high volume candle, as I've been mentioning, you get that nice flush into liquidity that has a big wick, reclaims with strong volume. That can then lead to a squeeze, at least back into some of these gaps over here. I'd potentially be interested in a day trade. So this is now talking low time frame, guys. You've got to separate low time frame from high time frame. This would be a quick scalp up if we do see that sweep and reclaim, one of those reversal patterns with high volume. That's the key. It's got to be nice green high volume. Then I'd look for some sort of long trade. I think the short trade's already been taken there as we rallied up to Tuesday's daily open, up to, of course, that 50 EMA. That's already played out. So GM, I know a couple of you in the Discord already took that trade. Absolutely G setup there. I was unfortunately busy recording some lessons, but is what it is. That's trading for you. This is the next setup and looking at some sort of long if we do reclaim that. Wouldn't be interesting shorting now here. Already called a nice short this morning, took profit on it, and from here, just waiting then for higher time frame setups if we can't get some sweep and reclaim, and that comes back to the 100-week EMA. So all updates will be given in the Discord. Drop me a Telegram message if you're not in it. And that is the Bitcoin market. Looking at the wider market now. So what have we been seeing? Well, Bitcoin rejecting off the yearly open. This looks set for downtrend continuation. Trend is your friend. Simple as that. Yearly open rejected after losing it, and that leads to further downside unless we reclaim it. Gold, so bounced off October FOMC level that I mentioned yesterday. Chop between 4K and all-time high, and that's exactly what we're getting. So as planned on gold, as expected, until we break below the October FOMC level, expect chop. Until we break above all-time high, expect chop, and that's what you're getting in between these beautiful levels over here. NASDAQ hit my target at September FOMC level. I said this distribution, this selling's likely going to head there. Started to bounce off that level, but yet to be seen, do we break it or not? Got Nvidia earnings today, can be a big one, especially for the NASDAQ. Nvidia, of course, has reacted bearishly so far to recent price action. So it tried to break out, filled it all in. So it's coming into its earnings off bearish price action. Let's see what happens with that. That can then lead to some correlation algo effect on Bitcoin. So going to be a big one. It's the biggest company in the world. Watch the September FOMC level in the NASDAQ below. Expect bearish continuation. Hold it. You can squeeze up to some of these distribution levels. It's as simple as that. And dollar. I said chop between October FOMC and $100, but it's now trying to reclaim that big $100 psychological level. Get above there, and you're looking at potential risk off continuation, and this high would be the target. So keep an eye on that level. We've struggled to accept above it so far, but if we now start accepting above it, that can lead to bearishness in your risk assets, catalyze the NASDAQ to lose the September FOMC, catalyze Bitcoin to make new lows, head to that 100-week EMA, and set up those sell-offs in the market. So that's what I'm looking at, guys. As I've been mentioning, yearly open wasn't the level to do any high time frame trading around. That was around mid-range, but now we're starting to enter those higher risk to reward areas around that 100-week EMA, around this big cluster of demand over here, which was the reaccumulation that led to these highs, and you would expect should lead to some bounce. That's why we don't diddle in the middle outside of low time frame trades. For high time frame, we wait for our areas of high risk to reward, as I've been mentioning. So guys, if you've enjoyed this video and you value my content, please drop a subscribe, turn that bell on, give me a comment. Let me know, what do you think of the videos lately? If there's anything else that you want to see, I read every comment, reply to them all. You can always message me on Telegram if you guys need. First link in the description. I'll see you guys in morning markets tomorrow. GM.